Centuria Life Goals is a specifically designed menu of investment options which we believe offers investors the best selection of active and passive funds across a broad range of asset classes within an investment bond tax-paid structure. Yeah, look, that's a really good question. I think it's critical to highlight that Life Goals has a robust investment process that assesses funds on a range of factors, and it's these factors which will determine whether a manager is included or removed from the Life Goals menu. And to add, the investment process goes beyond just fund selection and also includes a monitoring component. And this monitoring component couldn't be done without qualified investment professionals. And here at Centuria, we have a dedicated investment team that are responsible for constantly reviewing the funds. We also have an investment committee that meets monthly to discuss the ongoing performance of the managers. And it's this investment committee oversight that provides an additional layer of rigour behind the investment process. Without this active approach, Life Goals would potentially be just another standardised product on the market. However, I think our active approach in selecting and monitoring the best managers is a real point of difference for Life Goals, which I believe is a real source of value add, which will end up benefiting the investors over the long term. Centuria Life Goals adopts a four-pronged approach to manager selection, which includes fund ratings from research houses such as Lonsec, Zenith and Morningstar, the characteristics of the fund, which include the style, the management fee, performance fees, if the performance fees have a high watermark, and the fund's turnover. The quantitative measures, which we consider to be an integral part to the investment process, and this really focuses on the risk and the risk-return statistics of the fund. For instance, looking at how funds perform in both up and down markets, what level of risk through a fund's beta or volatility is a manager taking to achieve a certain level of return. And lastly, the qualitative considerations, which is really about who the managers are, the resources of the investment team, and the importance of corporate governance in their business structure and their track record. So these factors aren't considered in isolation and all form part of the analysis during the selection process. Yeah, look, all managers aren't the same. Each manager has a different philosophy and style when it comes to stock selection that may give them a bias to certain types of stocks. The active managers offered in Life Goals have been specifically chosen to be complementary to each other in both approach and style. So no two managers will be the same in this regard, which I think allows investors the ability to allocate to managers across a range of investment styles. I think this is really important as I personally don't see any benefit to the investor in offering 5 value or 5 growth managers. The idea is to offer the investor a selection of who we think are the best managers in their respective fields that satisfy our investment process and criteria. So for example, to look at the domestic equity managers and Life Goals, Fidelity Future Leaders has a GARP or a growth at a reasonable price bias. AllianceBernstein adopts a quantitative approach. Bennelong is our core manager, which encompasses both growth and value. Firetrail is our traditional value manager. Vanguard offer our index options, and BetaShares Geared is our low-cost geared ETF. So as we can see, all these funds are quite different in their style and approach, and it's this blending of different styles that's been applied across all asset classes within the menu. So each active manager on the Life Goals menu has its own quantitative manager selection model, or what we refer to in-house as MSM, which is updated and reviewed on a quarterly basis. These fund models, in addition to a number of other screens, allow us to calculate and monitor the risk-adjusted performance of an active manager against its benchmark, but more so importantly against its peers. As part of that quarterly process, all investment options and managers are formally reviewed by the investment committee. And in addition, we also have regular meetings and communication with all the portfolio managers as to the status and performance of their funds, which forms part of that ongoing review. Yeah, look, Life Goals is certainly not a set and forget product. We've been quite deliberate in avoiding that kind of setup. So we consider Life Goals to be live and dynamic, where we have the ability to add or remove managers for a variety of reasons. Reasons could include a manager's failure to adhere to their fund objectives, having material underperformance over a prolonged period of time, or having drastic changes to their investment strategy. So for instance, if a manager started taking short positions in a long-only fund, that'd be an example of a red flag to us. One of the advantages of the investment bond structure is it allows us to change managers without capital gains ramifications to individual investors. And any changes to the existing menu in either adding or substituting managers needs to be quantified, presented and considered by the investment committee for approval. I think this offers great flexibility as it allows us to act in the best interest of investors if, for whatever reason, we begin to see a material erosion of the fund's ability to deliver returns.